Yo, 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 what's up? What is going on, everybody? Welcome to the session here. My name's Rodrigo. I'm going to show you today pretty much the class that we had today with Mark Putrino. You probably know him from the trading school. He's traded with Steve Cohen, Mario Gabelli, multi-billionaires, people 35 billion plus, well known in the industry. And basically, I just wanted to show you because I think we can catch the tail end of the class. We might be able to catch like the last couple of minutes or more before we do pretty much watch the whole session. But let's go ahead and get this going, folks. Shout out to all you guys out there for watching and all the, just being here, hanging out. Let me go ahead and share this now. I believe he's still there. Yeah.
Remember, we have the PPI tomorrow, and tomorrow is the day where we talk about our trading models and investment strategies and so forth. All right, you too, Cypher. Thank you. All right, let's take a look at U.S. Steel here. United States Steel Corp. Well, this is this is something I would be looking at here. Again, we have our example here of what was support becomes resistance. So I probably myself would not buy U.S. Steel until it gets above here. So, people might say, well, that's ridiculous. Why would you pay a higher price than it's trading at now? And a lot of times people do that because the thought is, if it gets up here and it doesn't get through, eventually it's going to roll over and go lower. That's what happens when things get to resistance levels, right? If we don't get through resistance, if we fail at resistance, that's our trader talk for when you don't get through resistance, you fail, like back here, right? So resistance is a large group of sellers, right? It's a large concentration of sellers trying to place their orders at or close to the same level. So when a market is moving higher, like here, this has a clear support level too, so we can check out both sides of this. Look at that, right into within a point or within a penny. The reason why markets go higher is because there's not enough supply or sellers to fulfill all of the demand. Oh, you're welcome, Larry. So what happens is the buyers have to bid higher prices to entice the sellers to come into the market. It's like the example I gave before of the 1 million share buy order. Say you get an order to buy 500,000 shares and the stock is trading at 23.65. Well, it doesn't mean you can buy it all there. You can probably buy some there, but if there's just not enough sellers around, you're going to have to bid higher prices to entice the sellers to come in. When we get up to a resistance level, the things change. All of a sudden, there's enough supply to fill all the demand. That's why the market stops going higher, right? Now, what happens when we get to resistance, if we don't get through, like here, it looked like we were going to get through, but this was a false breakout. Picture a bunch of the sellers. I think for me, it's easiest if I visualize it as like in the old days where you have the group of all the traders are trading in front of the post at the stock exchange. And I don't know what, but I'm gonna have to think about that for a minute. So think about it in the crowd, right? They're trading. It's trading around 29 or 28.90. And then you look around and you start seeing, oh, wait a second, there's more sellers coming into the crowd here. Or, this guy who claims he's a buyer is lying, and I think he's a seller. So then they start to reduce their prices because they start to think, you know what, all these sellers are flooding into the market here. They're going to knock the price down. So I was trying to sell it at 28.95. I'm going to go down to 28.5, right? Other people see that and then they do the same thing. So when we get up to a resistance level and we don't get through, we tend to sell off like this. So going back to our example of where we are currently, if we don't get through this resistance over the next few days or a week or two, maybe, there's a good chance it starts to go lower. So when I say I would wait for the resistance to break, is I would buy it up here, because then the dynamic of support converting into resistance has ended. And that's a characteristic of something that happens at a market bottom. Do we know what should happen? Because we are smarter than the average individual trader. The actual investor population does not agree with us. Therefore, our perception of what can happen is wrong. Come on, Clifford. You're welcome, Barnaby. I hear all the dogs in the neighborhood barking. I told you guys this morning about what I saw last night. It was wild. There's this hawk in my backyard over here. The hawk was there was a turkey with a bunch of its, I guess, chicks. Turkey chicks. That's what you call the kids. And the hawk was trying to get them, and the turkey was like fighting off the hawk. And then Clifford went out there and he started barking, and then they all took off. But it was pretty interesting. There's been a lot of weird stuff going on with the birds in my backyard recently. But anyway, going back to here, this would kind of give us some insight that dynamic is not happening. You're welcome, Lynette. Chicks are poults. Yes, is that where the term poultry comes from? I never knew turkeys could fly. One time I was mountain biking, and now I know this. It's a gaggle of turkeys, right? A gaggle of turkeys. And I was mountain biking, and I come around a corner, and all of a sudden there's about 50 turkeys all just flew up into the trees. You know, I was right in the middle of the gaggle. See, how about that? Learn about words, right? In our class, we cover a lot of stuff: astronomy, history, linguistics. But here's a perfect example. You know, it's just so important to just knock it into your head that some price levels are more important than others. And sometimes we know why, and sometimes we don't know why, right? I mean, I would say, well, this was resistance here because it was resistance here. Why was it resistance here? You know, I don't know. But we don't have to know. And then you can see here that notice how we got above it. And in this case, wasn't a false breakout because the resistance had converted to support. People sell when it goes lower. They think they did a good thing. But when it goes higher, a lot of these sellers experience remorse. And they tell themselves, I'm going to buy my stock back, but I'm not going to pay more than I sold it for. So they place their buy orders at the same level that they sold at. And this process of what was resistance converting into support is a bullish dynamic. And it's something that occurs before we had this uptrend. I mean, obviously we're down now, but, you know, so that would be something there to watch. Flying Turkeys on WKRP in Cincinnati. Oh yeah, I like that show. I like that show. It's been a long time since I've seen it. What was it? Johnny Fever was the guy's name, and Lonnie Anderson was in it. She was like the bombshell of that era. And then the guy with the fake office, he pretended he had his office. Les Nessman. Oh yeah, you remember Les Nessman. Yeah, that was a cool show. Alrighty, so let's see what else we want to look at here before I get going. Oh, that's ExxonMobil. We haven't watched that in a while. Yeah, I mean, ExxonMobil pretty much is just going to follow what oil does. What's kind of interesting, right? If you look at any chart, you got to understand that it shows you market psychology. Every one of these trades, there's a buyer and a seller on each side of the trade. So when people say like, oh, no one saw the meltdown coming, or, you know, back in whatever it was, 2009, of course people did. They're the ones who sold at the top. But this is all just investor perception. I mean, well, I guess with I'm going to put up a different stock because this is going to be based pretty much on oil. So I'm going to just pick up a random stock here, Hyatt Hotels. All right. Now let's think about this. What has happened in the world that has made the valuation of this company fall by 25% in 2 months? Yeah, I mean, you could say, well, it's a slowdown, right? Maybe they're not going to get as much business. But most of the reason for most moves is just investor perceptions. I mean, investors just have a different perception today than they did yesterday, and people are illogical. The trading world, this type of trading is not a chess game. In chess, the rules are always the same, but in the market, the rules aren't, because ultimately somewhere out there in the universe, there's someone who has the opposite opinion of you. If you're selling, there's someone who's buying. And if you're buying from someone who's selling. So you guys have exact opposite points of view of the market. But yesterday we were down big and there was no news. I mean, we kind of, maybe guessed that maybe it had something to do with the strength of the dollar. But anyway, yesterday Microsoft was down 4.1%. What changed in the world that made Microsoft worth 4% less? And the answer is probably nothing. It's just investor perceptions. And this is, we see the mass psychology here, right? Here we have support, once again, becomes resistance. This is psychology. This is buyer's remorse manifesting itself on a chart, right? And I think a good analogy to this type of trading, it's more like poker. Some people think that, trading is a big chess game, and these these great traders like Steve Cohen or Mario Belli, they have these secret models that always work. And the reality is that's just not true. The best traders in the world lose money on a lot of trades. The best traders in the world probably have win rates of around maybe 50 or 60%. But the thing is, they let their winners run and they cut their losers. But ultimately, I think it's better to think about it as like a poker game, because you could be playing poker against someone. And if you're a poker player, which I'm not, and I probably wouldn't be, because I'm not very good at hiding my emotions. But if you're playing someone, what works today may not work tomorrow. In other words, maybe the person you're playing against, you play them today and then you play them tomorrow. Well, maybe they got some bad news at night and they're going to have a different emotional makeup. Or maybe you had some bad news, or maybe you had some good news, or maybe you didn't get sleep, or what have you. It's if you try to figure out the market completely with logic, you're going to go crazy because you can't. You have to understand that people are irrational and people do irrational things. And we see that in the charts. Bart, man, everyone in my family has the opposite opinion from me. Turkeys are mean, man. There were turkeys that lived behind my mother's house. And when she would get home from work, they would come out and they would attack her. So she would get home, she'd have to call my stepfather from her, in the house, and he would come out with a broom and chase them away. And this went on for a good 3 or 4 months before they finally took off and went somewhere else. But anyway, going back to this, right? What has changed? Economic slowdown, but what's so different about back here than here? Well, I guess the economy's slowing down, you could argue, but just from a mathematical point of view, that wouldn't really account for this type of a decline. And think of this trade right here, right? And hopefully this isn't one of you, but on November 22nd, the high trade was 349.67. So someone sold right at that top line there. It's almost impossible to catch the bottom or the top. So I would suggest that you don't even bother trying it. And when we think about trading, right? It's a lot of it is about the psychology, and it's like I said, people think that it's like this chess game, and it's not. It's more like a poker game, like I said, right? And it's more like the psychology. And you just got to understand that things change. Markets act different at bottoms than they act at tops. In a bull market, if a company announces earnings that are better than estimated, the stock could run higher, right? Oh, better than estimated. But we see situations where in a bear market, a company could report the exact same numbers, and the market would go down or the stock would go down. So things act differently at different times. When we see big moves coming off of bottoms, that's usually bullish. When we see big moves close to tops, we don't really see any good examples here. That tends to be bearish. Are you a middle child? Do we have any only children out there? I have 2 brothers and a sister, and 2 half sisters. But the reason why I'm asking that is because I have a good friend. He's actually also a CMT. He's an only child, so he was interviewing for this job, and which he got, by the way. But part of the interview was he had to go meet with one of these like industrial psychologists that they kind of evaluate you to see if you would be a good fit or whatever. So he said he goes in there and he introduces herself or whatever, introduces himself, sits down, and he says the lady says to him, "You're an only child, aren't you?" So like to this day, he can't figure out what he did that made her think that. So yeah, so I don't know, man. I don't know what it could have been. But anyway, all right, let's take a look at Apple. You are the elder of the siblings, the oldest. Oh wow, look at this. This is a pretty powerful move here. Again, you might look at it and think, well, it's only at 30 basis points. What's going on? But what I'm looking at is where we are versus the open. If you have this chart, right, the standard way to do it is to look at things based on the prior day's close. But I unclick that because I want my colors. Like, you see how some of these colors change when I click this? Like right here, like this was a down day because it was below the prior close, but this was above the open. So I like to do this. I think you get more insight here because you can see that it's down over here, but it's been pretty much rallying all day. So I'm going to get rid of this 144 level. I think that's kind of been negated. And I'm going to go say, well, let's just make it 143. And this isn't cheating. I mean, this is what we do with our charts. As the markets evolve and change, we tighten them up. So as we can see now, 143, right? It was like the precise top here. It was the close here. It's where the open here. Given the bad print, perhaps the sellers are exhausted. Yeah, I mean, we sentiment is pretty bad. We've looked at that in a few different ways. So, but again, we don't really need to be. We're going to let the market tell us what to do, and if we're really going to have some type of meaningful recovery, it's not going to happen until SPY gets back above this 390 level. So it's only about 10 points away. But this is going to keep a top on the market. There's a way we can look at sentiment, which I like to do, and let's see where we are here. You guys know this. When we look at the percentage of stocks that are trading beneath the 200-day moving average. All right, so right now, only 18% of stocks in the S&P 500 are above their 200-day moving average. And if we go back in time here, these all prove to be good buying opportunities. This is the housing meltdown. I don't really remember what this is. Whatever happened in September of 2011. These were great buying opportunities. So this blue line is about 14, and this is about 18. So, we're pretty darn close. Pretty darn close. So we'll see how how it plays out. I don't think, if we do start to move higher, I don't think it's going to be like a blast off like it was after COVID, because we're in a completely different environment now. We're in a completely different environment. We have inflation, which we didn't have before. We have energy policy, which really kind of ties right into it. So I don't expect us to come ripping back to new highs, probably anytime within the next few years. And it's important to remember too that the average bear market in the 25 bear markets that there have been since 1929, the average decline is 35%. So that would put the S&P 500 down to around 3020, or 3200. Oh, okay. Yeah. Thank you, Johnny 3. Now I remember that. Black Monday. Yeah. U.S. and global stock markets crashed following a Friday night credit rating downgrade. Moody's issued a report during the trading that said their AAA rating of U.S. credit was in jeopardy. Yeah, that's I remember that. And the government has defaulted on their debt before. It wasn't in our lifetime. It was during the War of 1812. But at some point, if we were a company, we would have been bankrupt a long time ago. We probably should get a credit downgrade. At some point, the chickens are going to come home to roost with all this stuff here, with all this deficit spending that we have. It's just, we're like in trillions and trillions of dollars. And like, what could the government do? They could say, well, you know what? We're not going to pay back full. We're only going to pay back 90 cents on the dollar. Hey, you don't like it? We're still the best. We're still the most safe country in the world. But yeah, there's really no way that a government bond should be AAA rated. Like, there's a TV show called Black Monday by Seth Rogen. Yeah, they'll just keep raising taxes until people can't afford to pay their taxes. What we got to watch out for now is, well, gas is coming down now, so maybe we won't avoid it. But if they start putting in price caps on things, that's just going to screw stuff up even more than it's screwed up now. And it's just personally, I think it's juvenile and it's pedestrian to blame. It's like who's the blame of the day, right? Why do we have inflation? Is it the what was it, the meat conglomerate, right? The poultry conglomerate. It's like, I don't know. They got it backwards, man. The war didn't cause inflation. The inflation caused the war because Russia is financed by oil. And Russia is in an economic deficit if oil's below, I think, $68 a barrel. So when oil, it's not a coincidence that the last time Putin, went to war with other countries, it was when oil was at $100 a barrel. So the energy policy and the inflation that we have is, in my opinion, the cause of the war. It's not like, let's look at oil again. So I get upset because I just think I just think it's so juvenile for the president of the United States to come out here and insult, like, ExxonMobil. And, ExxonMobil has 80,000 people that work for them, and they drive to work too. But if we go back here, all right, let's go back to here. All right, this here is the election. This here is Ukraine. Oil had gone from 35 to 96 before the war started. So I don't know. I just don't think it's very patriotic to, insult gas station owners or whatever. Look, man, it is what it is. Biden himself said he was going to put the U.S. fossil fuel industry out of business. So, it's people are like, well, they're blaming them for not drilling, but they banned drilling on all the federal land, and they talk about how there's 9,000 leases. Well, last year there was 27,000. So, unfortunately, it is what it is. My mom said that because we have negative growth 2 quarters in a row, are we officially Pat, you watch what you say. Ronnie, the accepted definition of a recession is 2 quarters in a row of negative growth. So the first quarter was negative. The next quarter is going to be reported on July 28th. So if that's negative, then that's like officially a recession. I mean, I don't know if that's the official term. It's just kind of like accepted wisdom or whatever. So I think that we're going to have negative growth, and it's not just me. The Atlanta Fed is predicting negative growth too. So let's see. Atlanta Federal Reserve. Let's see what they have to say here. So this isn't a firm or someone's opinion. I mean, this is the Federal Reserve Bank of Atlanta latest estimate. So they're predicting down 1.2%. So this would be if this comes in, and wow, look at this. Yeah, look at this, man. Range of top 10 and top bottom average forecasts are still way up there. But this is part of the Federal Reserve, and it was actually really kind of astonishing a few weeks ago when, on the same day that these guys cut their estimate from 0 to down 2%, that what's his face Powell said that he's seen no sign of a slowdown. But I think we are in a recession, Ronnie, and I think again, I just think that that's what this tells us. This slowdown in oil, the slowdown in copper. I don't think this is just regular trading. I think this is just something that shows, slowing demand. So I think the number will be worse than estimated, and the reason why I'm saying that, it's not based on anecdotal evidence or anything like that. It's just based on what I'm seeing in these commodity prices, the way they're all kind of just cratering. So it's a very different environment than we were in. Think about this, right? When the class first started in September, we were in, getting very close to the top of a market. We had a very inflationary environment. Now, since then, we've had a crash, had multiple crashes in various sectors and different stocks. But this is a gauge of inflation, right? I mean, look at this. This is down. This is a different gauge of inflation. All right, so these commodities are down 17% in just, what day is this? June 9th, so in a month. So I think there's probably no doubt that we're in a recession, and it's going to show. and it'll probably start to accelerate. It'll probably start to accelerate as we go into the fall. One second, guys. Just 1 second. I'm going to okay, 1 second. Rodrigo's saying we're getting some questions from YouTubers, so I want to go look at those and field some of those. Alrighty. Sorry about that, guys. I probably should have had that up before. All right. William Munns. Oh, thank you, Mr. Munns. Glad to have you in the class. All right, William Munns. Hello. Marcel. Let's see. MNDO. What's that? Mundo. What's going on here? All right, so let's take a look at this Mind CTI and see if we could come up with some kind of a strategy here or some kind of a trading idea. Well, the one thing that sticks out to me is this 220 level, right? This is our example of market memory. We got, whatever, down here. So if we look at this, when the stock was going lower, it's not a coincidence that this is where it found support. It found support at a level that had been support in the past. So this is what we mean when we refer to market memory. And sometimes these things can stay in. Sometimes these levels can stay intact for a long time, like longer than you would think. All right, so that's what I would see there. I mean, I would say the trading here looks pretty neutral. I would say, though, if you are trading this stock, if you are trading this, let's see. Hello, thank you. Just joined. Poker as in. You reach a level on a chart and you make a bet. It goes one way and see if the chart is bluffing. Well, the way markets work is when things get to important levels, you can almost consider it like a, like a fork in the road, right? Stocks, when they get to these levels of importance, they tend not to hang out at them for too long. They tend to break one way or the other. So let's look at this here, this Lockheed Martin, right? Resistance here, resistance here, resistance here. When we got down to resistance, within a day, we were, way back up above it. So it's like a crossroads. I think that's a good way to think of it. Like a chart is like a map, and your important levels are like your crossroads. This CVS is kind of a good example too here. This goes back a little bit farther, but back here, whatever day this was in February, CVS reported really good numbers. But guess what? The stock went lower. And the reason why is because it ran into resistance at the same peak that it did back here. Now, this is important to know because say you bought CVS down here at 80 and you tell yourself, oh, the numbers are looking good. I like the business. I'm going to sell it if it gets to 115. That's going to be my sell price. Well, you should really reevaluate because if it gets to resistance, it might not it might not break through. So we have to let the market tell us where to place our orders. You don't just randomly pull things out of the air, right? Like you got to be careful of if you want to buy something, placing your buy order below support. So, it's the same thing. You might say to yourself, oh, gee, I like CVS. If it gets to 50, I'm going to buy it. Well, it might get down to the support and blast off. And so you had the right idea. You were on the right side of the market. You thought it was going to go higher, and it did. But you missed the stock because you didn't understand where the support was, and you placed your buy order below it. Instead, you should place your buy order maybe a little bit above the support level, like around 53. So going from, it's not as good. Buying at 52 isn't as good as buying it at 50, but it's better than missing it. And we use this too for our targets, right? If you're trading, generally, what's your target going to be? Well, your target's going to be a place where you think the stock is either going to stall out or do better or whatever, Yeah, I mean, it's just, you can just see this on all these different charts. Like, look at this here. Huge difference. That DBC play was incredible. Oh. All right, so we got this here. So what Ronnie is referring to is we started to see inflation 2 years ago, right? But in the class, we started to really talk about it. I don't know, so was it December, January? And a bunch of the students got into this. I don't really exactly remember where various people got into it, but I'm pretty sure we talked about selling it up here. So this is an ETF that tracks the price of commodities. So if we're in an inflationary environment, when, I think now we're not anymore, or it's really coming down as we're seeing with these prices. But if commodities go higher, this is going to go higher. So between January and June, I mean, this was up 50% at the same time that the market is melting down. Oh, it was early January. So that was right here. Yeah. So, this was the inflation play back here. Now we're starting to see things come apart. And I mean, maybe we sold it here after, I think the sell was here after this trend line break. But look at this, like even here, right? Where did we find support? Back here. The same level that we were at support there. You also plugged us into UNG. Sounds like I should start a cult, right? It's probably a pretty profitable way to make a living. And but anyway, it's just like anything. If you do it long enough, you get some kind of competency in it, right? As you guys get more experience and more practice, it's going to be easier. It'll get easier and easier for you to just like look at any random chart and just say, hey, okay, these are the earnings, or these are the levels I should be thinking about. So let's look at I don't know. Let's just look at that ALB that we were looking at before. Now, sometimes levels aren't as clear depending on the volatility of the stock. This is pretty volatile. So let's take a look at what the Bollinger Bands would look like on this. All right, well, this could give us a little bit of a lesson in momentum here. And I like using these Bollinger Bands. This is, I mean, when I was in the trading world, I pretty much had these on pretty much every chart. So the reason why I think these things are effective is because they're based on statistics, and most of the algorithmic trading is done is based on statistics. So if this gets overextended one way or the other, traders are expecting a reversion back to the mean. Okay, so this is the Bollinger Bands here. This top one is 2 standard deviations above the 20-day moving average, and the bottom line is 2 standard deviations below the 20-day moving average. Now, why is this important? Well, because according to statistics, at least what they tell me, I don't really know. Oh, you sold Tesla at 111.90. My wife was annoyed at first, but now quite grateful. Hey, man, happy wife, happy life, right? At least they've told me about that. All right. Anyway, so why is this important? Well, 95% of all trading should be within 2 standard deviations of the mean. So if we get extended below it or above it, these traders are going to come into the market expecting a reversion, and a lot of times they cause the reversion to happen. So we can see, here was a good time to buy, here was a good time to buy, here was a good time to sell, buy, sell up here, sell, buys down here. So these things are pretty cool to look at. I have them on, most of the stuff that I look at. Tesla was an easy call, frankly, and I'll show you why. Wow, dude. So you sold it like up here, huh? Nice. Yeah, and I will show you why this was an easy call. So I guess you sold it right up here, so you're pretty much right at the top. But this was an easy call, and I'll tell you why. This here is another way of measuring momentum. It's a different indicator, but it's based on the same concept as the Bollinger Bands. If something gets overextended in one way or another, there's a good chance that things reverse, right? So look at how overbought Tesla got here. And this is really right at the end of the market, right before the market itself peaked. So we're way up here. Now let's go back in time. Back to here. So we're going back in time to the beginning of Tesla back in 2010. This was the most overbought that this stock had ever been in its history. So, this was kind of an easy, as stock trades go, this one was pretty easy. If you get something that gets to a historic extreme like that, we have to pay attention. But I'm glad you did. And I'll also give you the comment of the day for what you said this morning. That was pretty funny. Yeah, so it's I'm glad you did too. But we see this is what we would call an exhaustion gaps, right? So let's just picture this, right? There's people sitting out there thinking, I want to buy Tesla, I want to buy Tesla, I want to buy Tesla, but they tell themselves, oh, I'm going to wait for the price to come down a little bit. I don't want to pay these prices. I'm going to wait for the price to come down. And it keeps going higher and higher higher, and you're like, oh man, this thing keeps going up and up and up. Finally, you get to the point where the buyers get to the point where they're just frustrated and they're just like, you know what? Enough of this, man. I'm just going to go out and buy it. I'm sick of watching this thing go higher. I'm just going to go out here and buy it. And that's what all this is here. This is, I guess you could even say that this is FOMO buying, right? Fear of missing out. And we see we got back up here this time. But yeah, so as calls go, that was pretty easy. All right, everybody, I got to wrap it up unless you guys got any other specific questions. I got to go run some errands this afternoon and do some other stuff. So tomorrow we are going to be back in our trading models and so forth, trading models and investment strategies. So that'll be our class tomorrow morning. You for later. Let me take a look at you. You sit in your chair. It literally said that, man. Oh yeah, look at this. Unity software. All right, Joe D. I'll see you tomorrow. You might want to look for a little bit of a pop on this one too, right? Look where we are now. I see that. So it's not a coincidence that this is where the sell-off came to an end, at least for now. It's the exact levels that we were at there. Oh, Unity bought another company. The market didn't like that. Oh, you're welcome, Ronnie. But, I would be looking for a potential bounce here, former bottom. Yeah. Yeah, I mean, that's a big move lower. Iron source to merge. Let's see what iron source is. Iron source. All right, B2B. Yeah. I'll check you out. All right, I'll take a look at that later on. All right, guys. Thanks, everyone. And I will be back tomorrow morning, and I will see you then.
Great class there from Mark Putrino, Chief Educator at the Benzinga Trading School. So basically, I was going to show you guys the class from today, but Mark went pretty hardcore. I don't even know what time it is now. This was supposed to finish at 1. But it looks like he kept it going for an extra 46 minutes, which is pretty cool, right? So basically, all you guys that were here, all the video that you saw right now was the live class with Mark, and I just want to confirm here, right? So we were looking at market principles. You can see there were about 148 students live there. And really quick, for all you guys that did join, I want to give a shout out here to DRZ. Welcome to the family here, our most recent trading school family member. Let's go. All right, man. Make sure to check your email as soon as you sign up. Again, if you have questions, you can send an email. It's pretty straightforward. There's a 7-day trial for $7. After the 7 days, if you want to keep it, it's $14.97 for the year, and it does come with Benzinga Pro, which I'm going to show you in a little bit, kind of how it works. And just keep in mind, this is included in the trading school. Like this is, even if you just want Pro, like you're way better off just getting the school. To be honest, right? Because you get it included for free. Now you have the live classes with Mark. And you also have the full recordings. So for you guys that joined, I just want to give you a quick walkthrough of this so that you can get a sense, right, of what you're going to be doing. So if you go to my dashboard, you can pretty much... B2B. If you go to my dashboard, you're going to be able to see like pretty much the schedule that's laid out for the week and the upcoming week, right? So as you do that, right, you'll be able to pretty much schedule out your week and see what classes you have, the time, all that sort of stuff. In the video, in the header, keep in mind everything is in the header. So if you click live, it's going to take you to the live class whenever it's live. It did finish, so this is what I was showing you guys. There is a chat room here that is live. This is pertaining to the specific class, the class that you have. So in this case, it's the market principles chat room. So you have a live chat room with the instructor there so that you can ask questions and all that. Uh, Video library, you click this, you have all of the recordings, including the session from today, which I can show you. We could watch, the hour, we can watch like, 30 minutes, some time there. But if you have, the whole day open or whatever it is, you can always watch any of these recordings, and you can pretty much, get up to speed and really work on the chapters that you feel you need the most work on, right? We do have quizzes and all that. Let me show you class files right there. Every single chapter has quizzes. Quiz yourself, find your strengths, weaknesses, go from there. And you have more than enough materials. You have more than enough resources, all that stuff. And then you have this chat room here, Mark's trade ideas, right? And this is where you're going to be able to find entries, setups, levels, all that sort of stuff. And remember, you can follow up in the class at any point. Questions for Mark, if for any reason you missed the Q&A, in the Q&A session, right? Or you're not able to attend the classes live and you still want to have direct access to the instructor, this is the place for you right here. Questions for Mark. Student chart of the day, you have all the students pretty much sharing their trade ideas, education. You got Born to Be Free. What's going on? Pimp and Profits. Real G there. Stephen Beret. Mr. Stephen, how you doing, sir? Mark P. That's Mark Putrino. Mark P. So this is a pretty interesting chat. You can really get a lot out of this, and especially when you have a lot of the a lot of the senior members there, right? Born to Be Stephen. Questions for Mark again, right? All the questions you want to ask him. Student project plan. This is some sort of like trading process, trading protocol, trading system, if you will, that the students developed. Really interesting. Again, all this stuff just goes to show really, what teamwork looks like, right? Across the board when you have, smart people working together, again, with an instructor, right? That's really the best part of the school, that you have somebody that's done it before. Ultimately, in order to be able to be, a good coach, trainer, if you will, you need, you kind of need to know what you're doing and preferably have done it before successfully, right? Not just mediocre, do it, like be successful. And we all know what that means, right? So you have Mark Putrino, traded with the folks like, Steve Cohen, Mario Gabelli. These are multi-billionaires, right? So these, he was, I believe he was also a market maker. So he's been in Wall Street for about 20 years. I know he's done everything from pension funds, small caps, large caps, a whole sort of different trading models and systems, right? That he did with some pretty smart folks up there in Wall Street. So all of that experience in trading, he pretty much brings it back to the students and he applies it, right? He helps all you guys. What's going on, PDX? What's going on, brother? George, you should give it a shot, dude. $7, 7 days, and just go from there. See how it works for you, right? For those 7 days. So this is the all right. So I showed you the chat rooms, class files. Now, this is a chat room where I believe Mark is trying to use history or just, movies and things like that to pretty much explain something about, what's going on in the markets there, a little bit of insight. I believe so. And okay, so we went through the live rooms. Pro, again, is included with this. I don't know if you guys want to whip out a ticker or something, and I can show you really how you can work around that ticker, or we could just see what's hot right now in the markets. Let's see what is moving. Okay, regular session, all sectors, above $5. Liberty. Ooh, yeah, this I don't know if this is up. Let me check. I remember this one squeezed hard. There you go. A long time ago. long time. Well, yeah, like 2020. So it's squeezing right now. Who knows? All right, so this is really the scanner, right? So this is you can pretty much filter this by sector, market cap, price, uh, GOS. I don't know what this is. GOSS. This looks like a very nice reverse head and shoulders there. It looks like it's trading higher after the company announced 120 million in a private placement financing. Okay, interesting. So that's pretty bullish. That's pretty bullish, right? And this is private equity. So, I mean, that's something that I've done in the past, private equity. Um, and I can tell you that, if you find that within a company, it's very, very good. It means they have something really good going on. So, up 24%, about to break that $9 mark. I don't know if anybody's trading this, but um, this is, Stitch Fix. This is another company. I remember this is like a company that, like if you need a full, um, if you need to get dressed like completely, if you have no idea how to dress or anything, these people will send you shoes, pants, shirts, everything for you, right? Literally matching you and kind of renew it. So, but this had a pretty big drop, so just always be careful from 120 to $6. We'll have to see why it's going up. Trading higher after the company director, Bill Gurley, purchased 1 million shares at an average. So it's insider buying, right? Again, in Pro, you can really see everything that's happening there, right? Again, I'm going through the whole scan with you. If you want to trade it, trade it. I'm not saying anything. I'm just showing you really how you can use Pro on a day-to-day basis to find trades. Red Violet, what is this? Going higher still. What is going on? Okay, so it looks like Red Violet is a software and service company specializes in big data analysis, providing cloud-based mission critical. All right, let's click on the link here and see what we can find about this company really quick. Okay, all right. This is really good to have this link right there. So I don't know what's going on with this, but it keeps going. It's looks like it's going up. Let's check the news out, see why it's going on. I don't see any specific news here. Um, it says it was going to be added to the Russell here on June 7th, Russell 3000 and Russell 2000. So I don't know. It could be a lot of things. I'm not really that familiar with it. You have another one, SA, up 15%. Looks like it's going higher. Shares of precious metals. So this is called WIM. Why is it moving? Pretty much this is like a person there, shout out there to Randy and all the folks there that, do this stuff. This is a manual work. This is all manual work, guys. So we have people there scanning the markets. So it looks like shares of precious metals companies are trading higher as gold and silver rise, despite initially falling on the US CPI report. So this is interesting to know, right? On a full backdrop, what's going on? This chart looks really nice, but um, let's see what else we have. EXTR. This is I know this company. It's a communications company, but no idea why it's moving. You can find out here on Pro. Rosenblatt initiates coverage on extreme networks with a buy rating, announced its price target of $13.50. All right, so this is just really a small glimpse of what you can do with Pro. This is a chip company, AEHR. It was featured on Benzinga exclusives. It's on the scanner today. Not a bad idea. This is a chip company, so always be careful. But I think it's a US chip company. So it could be worth taking a look at that one. Let's see, Twitter up 8%. right? So, I mean, you can do a lot with this with Pro. Again, I'm only showing you one tool. This is the scanner. There's a whole bunch of tools on the top left. You just put your mouse there. You can see all this big drag down list. You can pick and customize each and all of them. So, so that's pretty much how you can use Pro. The school is pretty straightforward. Live trading rooms in the chat, video library recordings, dashboard for your schedule for the week, live whenever you're there for the live class. So we've covered everything here, guys. Want to give you guys a big thank you for watching, and go ahead and give the trading school a shot. I know that you're really going to learn a lot from Mark Putrino. He's a great instructor. He's really passionate about teaching and helping anybody that wants, to learn how to trade. Everything, even if you're, advanced, intermediate, new, it doesn't matter. There's a great community there. There's trades happening. There's a lot of education, breaking down the markets. Give that a shot, guys. It's $7 for 7 days. That's your trial period. If you want to keep it, it's $14.97, and you keep Pro with it for free as a courtesy on the house by me, Hot Rod. So thanks a lot for being here, guys, and we'll see you guys in the school. We'll see you guys tomorrow. Stay safe, and we'll see you folks in the school.